What's up, guys, and welcome back. This is Dalton with Financial Trades, and I want to go over how to potentially trade pre-market lows and pre-market highs and what you should be looking for when trading intraday, right? Now, these moves right here could be large, and they could be the moves that you're looking for, and the entries on these moves could be what you want instead of like trading just anything and everything, right? So typically I trade prior day spread, which is the high day and low day of the previous day. You want to see the stock incline or decline from the prior day. And if it does not, you're trading the prior day spread, which is the high day and the low day. You'll be trading in between. So this trade right here on the video, some of the things that I would be looking for when trading this is this pre-market consolidation, right? So, and yesterday. So, some things I would be looking for is I would mark my prior day low. And yes, you can mark your prior day high, but in this case, we never even went up here. So this is what I call the spread. If we were to trade above yesterday's low, you'd be looking at anything in between here. You'd be looking at the price action. So some of the price actions would potentially be like here or even like here, right? This is what you'd be trading if the stock were to be trading in the prior day spread. But in this case, it is not. So when trading this, some of the things that you need to mark are your pre-market highs and your pre-market lows, right? So in this case, your pre-market high is up here and your pre-market low is down here. But I'm actually going to delete the pre-market high, and I would rather focus on the pre-market consolidation high, where price was having the biggest trouble getting over in pre-market. So that is around this level, right? You can mark the high of it, or you can just mark the body right here. So these are the things that I'd be looking at while trading. Perfect. So if you were to get above this pre-market consolidation, which I would consider highs because it's a resistance and a support, it would be 219.21. Now this is a 10-minute time frame, and you can see that we waked up very hard at open intraday. So let's go down to a 5-minute time frame so you can see this better. This is why you always want to potentially trade retest and get a bottom entry, right? Your bottom entry would have been this pre-market consolidation here. This is what you would have been looking for possible opening pump. But as you can see, that pump did not really hold. There was no retest. It was just a major pump and a major dump right at open, right back down to pre-market lows. You want to be looking for this. This is what you want to be looking for. There is a perfect retest right here. So if we get this and point our arrow right here, this is where price dumps, comes back for a retest, and there is your move, right? Now, prior to this retest, you can see that there is a consolidation here with a major sell-off. But when you have large breakouts to the downside or upside, it's crucial for you to see retest, because without a retest, that is typically where the reversals happen, and that's typically where the average trader chases. You have a level that you're looking at, you see a breakout through your level, and you chase it, right? That's what you've been looking for the entire time. But in a case like this, where you break out to the downside and then you make a huge reversal all the way back up above your support, that is what I call a quick wash reclaim, right? They wash everybody out and then they push it higher. So as you're trading this, you can see that they push price all the way back up to the highs after breaking this pre-market support. So consolidation, sell-off, you had some chasers, pumped the stock back up, stopped almost everybody out, right? Everyone who chased this and bought puts, it stopped them right back out, pushed it right back into this consolidation range for another sell-off, but in this time it has a retest. And then you can see down here where you have another consolidation range. Really, really good resistance right down here with the support. And as you see, when price consolidates and pushed further downwards, it did make a huge recovery based off this level. And then you can see that throughout the day that we constantly kept respecting these levels down here around these consolidations, because you're constantly looking for price to return back up where it was, but instead it's using these lower price action to get rejected off of, right? You want to see price return back to a place of, let's just say, interest, right? So if you're going to short this again, you definitely want price to return back to a spot of interest, which is this consolidation range, which would be candlestick price action. Instead of drawing lines, you could have theoretically drawn a box. So once price returns back to a place of interest, it gets rejected again. But in this case, I like my lines, right? I like my lines. The lines are real clean. This is what you call almost a perfect trading day. Almost everything went as it should have. You can obviously see down here as well, price breaking below this with a resistance and a retest, right? So you had a break below this support. We acted as a resistance. We got above it with a retest and a push higher into this place of interest with another short to the downside with a recovery around that support level again. As you're day trading, these are the things that you want to be looking out for, and this is almost perfect price action. Now, if we go look at SPY, and my chart glitched up heavily there. Let's get this back to our current day, right around here. So as you see, I charted this already just a little bit. So we can remove some of these drawings, right? Remove, and remove. So some of the things you want to be looking at when trading this day is the spread of the prior day, which is the low a day, and the high a day, which is all up here. I got these lines up here. So without breaking the low of the prior day or the high, you get stuck in this range, right? You get stuck in the range from 405 all the way to 414. Now, it doesn't mean it's going to go to 414 because there's other things that you should be looking at. These other lines are my key levels, right? So I got my key levels here. Pre-market high. You definitely got pre-market high here. Pre-market high and pre-market low. So boom, you got the yesterday spread, the high a day, the low a day. You got pre-market high and pre-market low. Without breaking above pre-market high and without breaking below pre-market low, you were stuck in the range again. So not only are you stuck in yesterday's range, but you're also stuck in pre-market range as well. You want to see a pump above with a retest. If not, you're just trading breakouts and you're getting rejected the entirety of the time. But one thing I would like to point out here is this consolidation range in pre-market. You see how you had consolidation here with a sell-off, consolidation with a pushback up with consolidation? That is where price kept recovering all day long. So you're constantly seeing rejects up here and you're constantly seeing recoveries down here. No major direction, right? You don't really have too much direction. You have a pump, retracement, pump, and then retracement post-market. Now this style of trading and NVIDIA style of trading are two different things. They're the same thing, but they're two different types of way of trading, right? And predicting what's going to happen. Obviously here, you had no break above, you had no break belows, you had a consolidation day the entirety of the day. NVIDIA, you had a break below, you had a recovery, a break below, retest, and further downtrend. That's the difference, right? That's the difference when you're looking at these two, is this one had no break aboves or break belows with retest, no direction, no momentum to the upside or downside, just straight up sideways consolidation price action. And the video was totally different. These are the things that you want to be looking at when trading. You want to find your best entries, your best exits, and trade it like that. Your best entries are going to be for a short, right? If you're going to be shorting this thing, your best entries are going to be at the highs with your stop losses above those highs. You got to factor in potential momentum though. If you have heavy direction, you tend to break these levels and you tend to continue to go upwards or downwards. In this case, you had no direction, no retest, or none of that. So your best entry was at the high for retracements. And for recoveries, your best entry was at the lows, right? So that's what I'd be looking at, and that's what I look at every single day as a full-time day trader and option trader trading the stock market. These are things that's going to happen every single day, and these are the best ways to trade the market as a beginner or advanced trader. It's very basic. I love basic. It's just simple, easy, looking at price, and you can almost do this every single day. So this right here is going to conclude this video. I am going to have more videos this week, so make sure you leave a comment, like the video, and even subscribe to the channel to get my future videos, and turn on the notification thing as well so you can get notified when my videos are released. Like I said, if you have any questions, you can leave a comment below, or I'll leave a link to the Discord where you can DM me any of your questions and I will answer you almost instantly, or you can get in contact to me on Instagram as well.